The Fed and the government are trying to do something they never have before. They're trying to backstop a recession from occurring, or at least that's what they claim. The recession can't be stopped by their policies regardless, but this is what they're trying to do. Typically, it would have been possible to lower interest rates, create an artificial lending spree. This would spur growth, and when things began to heat up, they would start to increase rates. Well, they failed miserably at this plan that was so predictable and straightforward. Instead, in the end, they will eventually own everything. You came here for the truth, so let me unveil that for you. Today, we're going to look at what's happening with the loans, businesses, small businesses, the economy, and then I want to talk about the markets. I want to show you everything that you need to know right now, so stick with me. Let's begin. Commercial and industrial loans, you can see that we are in a territory we have never been in before. This is in the billions of dollars, and you could see on the right-hand side, it looks unlike anything we've seen. Take a look at the two previous recessions. This is the gray shaded area, of course, and you can look at this. We have these waves. During a recession, this starts to come down, and then as things start to be normalized again, the lending starts to happen. Things heat up, recession comes in, it falls down, it comes back up. You know how it works. This time around, though, there wasn't this down point. It didn't happen. Instead, we're going in the opposite direction. This is an extremely dangerous policy that they are trying to implement. It's going on with the Federal Reserve, it's going on with the governments, and we're seeing all of it happening right now globally at the exact same time. There's this massive expansion, this inflationary expansion that's trying to fight off the natural deflation that is supposed to occur during these times. They are playing these mad scientist games that will not end well. Here you can see the commercial and industrial loans, but this is in terms of change. And I'm just showing you the fact that it has never been anything like this before. There have been times when it spikes up, but nothing even close. You could see again, in terms of change, we're supposed to see this coming down during this period, but now we've gone into a whole nother level. What they're trying to do, of course, is going to make the end result much worse. This is a really good article that I suggest everybody read. I was going to break it down, all the different parts, because it brings me in from those two charts that I just showed you, but there's not going to be enough time to get into it in too much detail, but definitely want to hit a few points. Something's wrong. A debt-financed recession. The Fed's debt bridge policy is designed to improve the flow of credit to businesses to avoid a devastating credit crunch. Never before has one of the monetary policy solutions to combat recession been to extend credit to struggling, profit-losing businesses. Think about that for a second. You've got businesses that are failing and you give them money. What happens to that money? They're going to go bankrupt. They're going to lose it. It goes down a black hole. Now that happens to be your tax dollars in some cases. That happens to be Federal Reserve notes. This is not a good idea for so many pieces of this puzzle if you want to look at it like that. And I understand what they're saying that they're trying to do. This is the trajectory, this is where we're headed, and then we have the crisis of 2020 where it falls down, but they're saying it will end up going back to that point, to that trajectory. All we got to do is fill in the blank. If we simply get this artificially propped back up, everything's going to correct itself, and then we'll be able to take off from that point instead of having to restart from down here and grow back to the top. That's their brilliant idea. That's their brilliant plan. I see that repeated everywhere, literally everywhere. But people don't understand there is a natural cycle that exists all around. This is going on in nature, and the same thing happens with the economy, with the markets. It is supposed to happen, but they're trying to manipulate that. They're trying to do something that cannot work. They're trying to create a completely planned operation, and of course, this is going to create a problem down the road. So instead of contracting, which is the typical pattern during the recession, the flow of private credit has exploded to the upside. I completely agree with this. I think it's pretty obvious. And down the road, we're going to see why this was such a bad idea. I'm going to show you some information from the NFIB, and we're looking at the small business survey. Many small businesses in the US only able to operate 1 to 2 months under current economic conditions. Not very good. You could see the 1 to 2 months right here, 35%. It is definitely the largest group, as well as 3 to 4 months. If you look at that, it's over 20% in this case. So we're not seeing the V-shaped recovery, and what's going to happen when this really slow recovery comes around? How long will that take? I believe for many businesses, it's going to be more towards the ground than anything else. This is an interesting one. You're looking at the impact on small business, and you can see no impact, yes negatively, and yes positively. Check this out. The 3 lines are March 10th, 20th, and 30th. And as the days move on, 10 days each one, there's a huge difference, okay? So look at the no impact. This was at approximately 75% on March 10th. And then March 30th, basically near zero. If you look at the yes negatively on March 10th, it was just around 20 something percent. Looking at it on March 30th, it's over 90%. So this tells us that in a matter of 20 days, there was this huge change. And what do you think April's going to look like? When we get those numbers, of course, I'll bring them to you. But for so many businesses, it's just going to get worse and worse and worse. And they're probably going to have to shut their doors down. Small businesses very bearish about the economic outlook. How long do you think it will take before your local economy is back to near pre-crisis levels of economic activity? The largest group said sometime in 2021. That's 40%. You can also see 19% suggest between 2022 and 2024. Nobody knows where this is going to go, but this is getting information from those small businesses and what they're feeling. Directly from the NFIB, you could see are small businesses planning to hire? Doesn't look like that's the case. It has dropped off a cliff, just like so many the other statistics. You can see it's basically at zero right now. Nobody knows what's going on next week. Of course, they're not going to know what's happening next year. They're not hiring right now for so many places. They're at a standstill. They're in this wait and see moment, and that affects jobs, of course, because they're not expanding. They're not adding to their company. Not just the workforce itself, but maybe they were planning on additions, maybe they were going to get new floors of real estate, and of course that has a lot of jobs affected, the trades jobs and so many different things. All of that stopped. This one was obviously expected, but I wanted to cover it anyway. Tourism meltdown. Leisure and hospitality jobs have plunged this spring. You could see it falling off a cliff. The number is the worst thing on this chart right now, and that's going back all the way to 1990. Unbelievable to see how things have really changed in just a matter of a couple months. And I wanted to switch gears. We're going to look at the financial side of this, and you could see how the disparity has grown in between Main Street and Wall Street. Look at this. Very important positions, VIP for hedge funds. 50 stocks that most frequently appear among the largest 10 holdings of hedge funds. Do you want to take a guess? I'm not sure if you could see the font is quite small, but it doesn't take a genius to figure out. We've got Amazon and Facebook and Microsoft, Alphabet, Alibaba, PayPal, Netflix, Apple is down here, and the usual suspects find themselves once again at the 50 stocks most frequently with these hedge funds. But they're not the only ones buying into these, of course. Check this out. Retail interest in mega cap growth stocks is ramping higher. I got a lot of detail on this to show you. The blue line is the mega cap growth stocks, and you could see the acceleration here. This is January 2020, and right around then it had ramped up higher. It's only a small group of the total, but it gives us a good idea. Chart on the left-hand side, retail trading activity has surged, and that is very clear. As you can see on the right-hand side, Robinhood data show a leap in retail investor equity trading activity. Basically, they bought the dip, and that is clearly evident right there. This chart is showing you the retail favorites, what the retail investors are loving right now. They bought the dip on Moderna, and you know the story there with the insider trading and how that all worked out. Interestingly, we've got buying the dip scenarios. Royal Caribbean Cruises is on here, Carnival's on here, Norwegian Cruise, Uber, Ford is on here. I mean, there's all these names, very typical, but are the retail traders a trend of what is to invest in or what to stay away from? Perhaps it's a bit of both. And this right here is so key. I can't believe that this is actually happening. Well, you heard about the Federal Reserve buying into corporate bonds, right? They're going to buy the ETFs. They're going to buy the junk bonds as well. Well, you remember Hertz claiming bankruptcy. They're going through the Chapter 11 process. Guess who is about to own some of that failing company? That's right, the Federal Reserve. Through their ETF purchases, courtesy of BlackRock, making it all happen. This is just showing you the high yield within that particular ETF. They have some exposure to Hertz. This is showing you the junk ETF, same situation. They do have some exposure there. So based on this, we'll see what happens. It looks like the Federal Reserve will end up owning the debt of Hertz. This is going to be just one of many, and I would like to get a whole list as they all come out. If we can get some totals on this, I'm going to try to do a whole video on it as it progresses. In fact, I could do multiple videos. It will be really, really interesting to see how this all works out. And this tweet here actually summarized some very good information. We let big box retailers stay open because they sell essential goods, but they also sell the same non-essential goods that small stores who are forced to close normally do. We can't let this run small stores out of business, and we need to make sure that we level the playing field. I think that's really good because what it signifies is that we have big businesses that are allowed to persist. They get the bailouts. They get all the good stuff. The small businesses, they get crushed. Look, if you get a loan, that's just going to delay the inevitable. You're not making revenue. How are you going to survive? If you don't have revenue, how can you survive? If you got to pay your rent, whatever that is, half the price, they're only going to charge you 50%. Well, you had $0 in revenue. It doesn't matter. Well, who cares anyway? Just buy FANG stocks and everything's going to be okay. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. Just click one button. That's all. Thank you. If you want to check me out on Instagram, on Twitter, I'm doing videos every single day. Check me out at The Money GPS. If you want to learn how to sell online, you want to make money, understand e-commerce, anything to do with this, you have to pay $1,000 on average if you go to these other courses out there. Well, I took my knowledge, I put it in this course, made it for free, the AmazonGPS.com. If you want to read the 2 books written by the most criticized person on this platform, well, you can absolutely do that. They're available at the link in the description. If you want the audiobook instead, themoneygps.com. This video here absolutely took off. You definitely should check it out if you haven't already. Click on it. I will see you there.